I'm going to let others in.
Hi, good afternoon, or rather good evening, everyone. Let me start the session on behalf of the CFA Society Sri Lanka. I'll firstly share the presentation slides. Right, on behalf of the CFA Society Sri Lanka, I would like to welcome you all to this timely topic and talk on the rapidly evolving financial landscape in Sri Lanka. This quite timely topic, which is the role of financial influencers, or in other words, what we probably call as Finfluencers. Let me, my name is Siddharth Kalyanarathna. I'm the chairman of the um, advocacy committee of the CFA Sri Lanka Society, and I'm also the group head of the new initiatives of David Pierce Group of Companies of Sri Lanka. So with me, I have Mr. Pankaj Sharma, who is the lead who leads the research, advocacy, and capital market policy for the CFA Institute in India. In his role, Pankaj is responsible for advocacy policy positions on issues that affect Indian capital markets and stakeholders across a broad spectrum, including corporate governance issues, ESG and sustainability, use of technology in capital markets, opportunities and challenges with different asset classes, demographic influences, and other important relevant issues for the markets. So over the last more than 2 decades of his career in capital markets, Pankaj has rich and diverse domestic and international work experience in various roles with global investment banks, Indian equity brokerages, and research and ESG startups. He has also been an author and regular contributor in print and electronic media on economy and capital markets. Pankaj completed his engineering from IIT and MBA from Faculty of Management Studies, University of Delhi. I would like to thank Pankaj for joining us. But before I invite him for his very enlightening presentation, I thought that I should start the discussion or the presentation with few slides of my own, which I believe you can see. Minura, Pankaj, you can see the slides, I believe, but I have on.
Yeah, most certainly. Thank you, Siddharth. Yeah, we can see the slides. Yeah.
Great. So I thought I'll share a bit of context of what Sri Lanka is going through, and how the play is on the influences in the Sri Lankan market, and then from there give a bit of context and lay a sort of a foundation so that Pankaj can take the presentation from there. So let me begin with a few numbers. What you see on this slide are few names and numbers. Names are not there for me to sort of talk about them or criticize them or give them any undue preference. It's just there for you to get a sort of a flavor of some of the readerships that I've seen in a website called Hive Influencers, which sort of ranks some of the leading influencers in different segments. So what we are looking at today is the Finfluencers. So what you see is significant viewerships compared to the small domestic market size in Sri Lanka. You're seeing significant subscriber base for these influencers, significant viewerships. And also a couple of points to note. One is that most of these have come about or started their channels around the COVID, just before the COVID, just before the lockdowns. Then we all know globally as well as in Sri Lanka and India, Pankaj will talk about that later, that these became quite mainstream during the lockdown post-COVID and the following years. Over the last 5, 6 years, this has become sort of a trend. So the last point that I want to highlight here is that none of these names that you see in this slide uh, have got registered with the central bank. So another point, or with any of the regulators like the Securities of Exchange Commission. So none of these names have got registered. So that is another point that I want to sort of leave with you on this slide. So basically, the bottom line, however, is this: these creators are shaping how everyday Sri Lankans think about money, investing, and also financial planning. So, democratization of financial knowledge is an exciting thing, something that we have to face, we should face, and not something that we can avoid. But what we need to understand is all this comes with certain risks. So that is what is going to be the topic today. So over the next 10 minutes or so, what I'm going to do is I'm going to play the devil's advocate role here. I'm going to be fairly negative and look at the challenges, the risks, so that I sort of lay a platform for Pankaj to come forward and share his experience, his learnings on Indian learnings and experience, so that we can use those to sort of bring about a proper structure so that the influencers can have proper influence and a proper say on how things develop in this domain. So if I may just start off with some of the dark side deceptive tactics that we've seen in Sri Lanka in terms of financial influencers. I must say that not all fall into this boat, but at the same time, not all influencers have operated with integrity. That is something that we have seen over the last 4, 5 years. So we've seen certain manipulative sales techniques like limited time offers, complex jargon being used to clarify simple matters without really giving a proper understanding to the audience. And more often than not, we've seen fake testimonials and rented luxury lifestyles being projected to give a false sense of success. So these are things that we've seen over the last few years, even in Sri Lankan market. I'm again giving some context to Pankaj as well, to draw from when he comes to the speech, so that he'll be able to also connect the dots. Something that we saw early this year, which was quite surprising, was a deep fake video impersonating the central bank governor, basically falsely endorsing crypto schemes in Sri Lanka. So this went so viral. At one point, the central bank had to come forward and basically give a proper official warning and basically send the message out to the Sri Lankan audience not to get caught to schemes like this. So it went up to the level of the regulator as well. Then going beyond that, what we have seen is that there have been instances where influencers omitting critical facts. Again, not all of them, but we've seen instances of these where you sometimes hide key facts. Like, let's say, if you're looking at a fund investment, they don't talk about the penalties, management fees, withdrawal fees. If you're looking at performance of the fund, sometimes we've seen people misstating the fund performance, even going up to the level of sort of fabricating certain performance figures and pictures. And we've also seen certain misleading information being published on tax benefits or disadvantages. So these are common things that we've seen. I'm sure some of the audience members also may have seen some of these in the media, published media. So another example, for instance, that goes with the crypto, we noticed frequently, especially over the last 3 to 4 years, that crypto influencers frequently marketing the cryptocurrency, ignoring the fact that it is an unregulated market in Sri Lanka. It's not recognized as a legal tender and also not protected by any financial authority. So this could, however, yet they continue to promote it as a guaranteed path of wealth, which is also something that we thought was alarming. given that Sri Lanka doesn't recognize crypto as a formal form of investment. So going a bit beyond that, this is of course something that uh, we've seen even in the non-social media, non-digital platforms as well, where influencers recommending products that are not really appropriate for the audience. This is sort of age-long issue that we've sort of come across financial markets, but now it's been sort of identified as a key issue with the influencer market as well. Uh, Typical examples are life insurance being sold to elderly unemployed individuals, high leverage forex trading being pitched to inexperienced youth or illiterate, financially illiterate audiences, especially in a country like Sri Lanka, where high leverage or forex trading is even difficult for institutions. We really don't see how it can be a pitch to individuals who don't have financial literacy. We've also seen crypto loans, for example, being put out to unstable income or again financially illiterate audiences in Sri Lanka, in a country where cryptocurrency is, like I just mentioned earlier, is not even accepted. So these sometimes are become high profile cases as well. We've seen in Sri Lanka these sort of practices have gone into so mainstream and have got identified as pyramid schemes as well, more often than not. This, what you see on this slide, was a troubling case like that, which we identified in 2023, which came into media as sort of a pyramid scheme, which lacked the regulatory approval. But this particular case of Metaverse Foreign Exchange Group became a high-profile case at the time, and by the time they were sort of identified as non-regulated, most of the people have already invested, and some have had losses as well, from what we have heard again through the media. Then going beyond that, we've also seen certain claims on guaranteed returns and also hiding the true risks of the investments as well. Guaranteed returns is something that we've seen quite commonly. And like I mentioned earlier as well, we've seen fabricated profit screenshots also being circulated by certain influencers in the Sri Lankan market context. Um, what you're seeing on this slide is again a very prominent media incident that we came across again a couple of years back on sports chain crypto being a guaranteed investment, was pitched as a guaranteed investment in Sri Lanka. Later on, which was again identified as a sort of a pyramid scheme. But what we understood was that some of the initial investors had already lost money at the time. So again, this was coming from a influencer sort of an audience at the time. Moreover, what we have seen is influencers often fail to disclose the risks, key risks like market volatility, legal uncertainty, and also capital loss potential. These omissions can have a devastating effect or consequences in an audience like Sri Lanka, where the markets are fairly nascent, I would say, and there are many uninformed investors in the Sri Lankan context. So therefore, when the market is growing, practices like this can have a devastating effect. Then if I may move on to um, uh, another issue, lack of transparency on financial influencers. Sometimes what we have seen is that most of these influencers earn commissions or bonuses for promoting products even in Sri Lanka, but fail to disclose these relationships. So there is a conflict of interest. Conflict of interest is a fairly well established topic in our domain. But when it comes to influencers, what we understand is that the conflict of interest can be quite significant, and it's certainly, like with any other case, it undermines trust. So that is something that the influencers have, some of them have failed to sort of recognize. They will not come out with the referral codes, hidden sponsorships, and undisclosed partnerships that they have in common. they don't disclose that properly, or they don't disclose that at all from what we've sort of identified. So all in all, I've gone through a few slides where I have been fairly negative, like I did mention earlier. So that was the sort of approach that I wanted to take here. But end of the day, what we are seeing from the regulator, there is a fairly rapid response over the last, I would say, 2 to 3 years. Central bank as well as the financial intelligence unit have stepped forward, and their goals have been around four main areas. One is on strengthening the financial stability and also consumer protection. Then also combating misinformation, which is quite common, like I did mention with some of my examples. They've also looked at introducing legislative reforms for strict oversight and also promoting transparency and also cybersecurity. So these four topics have been fairly thought through, and the regulators have been after these four topics. I think that is where we thought, as the CFA Society Sri Lanka, that the discussion with Pankaj is a timely one, because India has gone through this process. They have a fairly, I would say, advanced setup than Sri Lanka. As you can see from this slide, the India is way ahead. So compared to India, where the Securities and Exchange Board of India enforces strict regulations, Sri Lanka is still in the early stages. However, disclosure rules are not further disclosure rules are not yet mandatory, and also enforcement is fairly minimal, as we've discussed before. But the ecosystem, like I did mention, is growing. So what we thought was that the regulator framework also will have to step up. I think we have a lot to learn from Pankaj's story, his research, his knowledge. We believe that the influencers have the power to educate, inspire, and empower, but with great influence comes great responsibility. So that's the message that we want to sort of leave after this presentation, and see how Pankaj and Indian story sort of tell us how that can be achieved, how we should go about that. So with that, let me invite Pankaj to share his presentation and also share his story. I'm sure it's going to be a very enlightening one. Pankaj, over to you. I'll
Thank you,
stop
Siddharth. Thank you, CFA
presentation from.
Society Sri Lanka, and uh, I'm grateful to all the people who have joined for this event. I'm really honored, and it's my pleasure to share with you whatever perspective I have. And we have done, as an organization, we have done a lot of work globally and in India on this issue. And when Siddharth was talking about some of these things, it was uh, very uh, clearly resonating with me in terms of a lot of developments which are common. And before I go to my presentation, I would highlight a few things. One is that the example of a fake video, AI generated video, a deep fake in the name of governor of Central Bank of Sri Lanka. There are a lot of similar things which are happening in India in the name of the richest person in India, Mukesh Ambani, Reliance Industries Group, also in the name of Ratan Tata. Some of these are very reputed and very credible businessmen, and there were deep fakes prevalent in the market where they were promoting bitcoins and they were promoting schemes which are nothing short of Ponzi schemes. Another similarity which I probably think is because of the fact that in terms of demographics and the awareness levels in terms of finance uh, knowledge and credible information, Sri Lanka and India both have a lot of similarities, and they are markets where a lot of careful attention needs to be paid by the regulators and the authorities, and even people like us have a great responsibility. And as Siddharth was concluding his remarks and said that with great power comes great responsibility, I think there is nothing more true than that statement, because as such, influencers can do a lot of good work. They can add a lot of value, but ultimately, it's a market where buyers need to be beware. Buyers beware market means that if you have to trust someone, you have to do your own homework. You have to do your own research in terms of how much that information which is being shared is trustworthy, how much is credible, and ultimately it's all about how much you are ready to believe someone when they are promising things which are too good to be true. And it's often the case when we are greedy, when we are believing things which are too good to be true, that we will make mistakes related to financial matters. Most investment mistakes, and I was talking to a very senior official of local regulator SEBI in India, and he said that of course they are trying their best to limit the damage, to mitigate risk. But he made a very pertinent point, and it left a very strong impression on me. He said that ultimately, when you look at the returns which are being offered by, let's say, a government entity, for example, the public sector bank, or even the institutions which are development finance institution, the returns are in the range of 8% to 10%, even in the best case scenario. And when somebody comes to you and tells you that you will make 10% return in 3 days, or your money will double in 15 days, you need to be careful. And ultimately, of course, there are risk mitigation mechanisms available. And if there is a loss and if there is a genuine mistake, the authorities will do everything they can to ensure that this doesn't get repeated and you get your money back. But as a investor, as a person who is looking at some of these investment opportunities, it's also your responsibility to do a little bit more homework and not believe and not trust anything and everything that comes your way. So with this, I'll probably move to my presentation. But as I said, Siddharth made some very good points about how this landscape looks like in Sri Lanka, and there are a lot of similarities and common learnings for the markets, not just, I would say, between India and Sri Lanka, or between Sri Lanka and India, but even otherwise. So, like if you look at most of these issues which you have today related to influencers, are common, and you will find that there are a lot of places, a lot of markets where the challenges and the situations which regulators and government authorities are dealing with are very, very common. They have a lot of similarities in terms of the issues which we are dealing with today. So with this background, I once again thank Siddharth for his nice presentation, very useful, and also to the CFA Society India and all the audience. And thank you so much for this opportunity to make my presentation and talk about things which are, I believe, very, very important for everyone and all of us. Can everyone see my presentation now?
Not yet, Pankaj. I think it's loading.
Okay.
I think we got it.
Okay. So I'll begin with why we are doing this. Like as an audience, you are spending almost 1.5 hours of your precious time during day. Siddharth has put in a lot of effort and made this presentation. There are a lot of other people and effort involved from CFA Society Sri Lanka. I think the key reason is that we think that this is an issue where there is a lot of gray area. I mean that when we look at influencers and their role in investment decisions, there are a lot of good things. So, for example, the way they present the content, I think it's just amazing in most of the cases. It's so catchy and it grabs attention. The lessons and learnings are with you for a longer time. And sometimes you wonder that why this cannot happen in all the cases, why the communication needs to be so dull and boring at times, and why can't all of us learn from influencers and the way they present content. The second good thing is that a lot of time these difficult concepts, for example, compounding of money, is a very simple concept, but when it is being explained by influencers in a way that how it takes care of your retirement corpus, and how inflation is being explained, that today what a million rupees is worth, $1 million is worth, 10 years later is worth less than half of it. the way many of these concepts are being explained to people, they do a very good job. And similarly, like there are of course there are good things, but similarly there are bad things as well. There are always the cases that there is a bad apples, and they will talk about things which are unrealistic without proper disclosure, without even talking about the risk involved. So there have been cases, like one of it was highlighted by Siddharth as well, that there is no suitability analysis, and there have been cases in India that a very high risk category bonds of a bank, which later got in trouble, was sold to people who were investing their retirement corpus in it. Imagine somebody at the age of 70, they can't afford to take even basic minimum risk, which probably a 25-year-old investing in equities can take. And somebody who is pushing these products to naive or gullible investors like them, it's a great disservice. It's an inhuman act in a way that you are putting somebody's retirement corpus under threat. And that's something which is a very, very common occurrence. A lot of times you would see influencers issuing statements, and there are not just untrue, but they are so risky and dangerous in terms of even the common investors who have a decent enough risk appetite, even for them. And there have been cases, even just recently this year, there was a case of Gensol Engineering in India, where this company was later found out to be a like nothing short of a fraud. And there was a problem in terms of so many influencers and so many celebrities pushing this in terms of how great an investment it is, what a great job and business the company is in. And that's something which is a challenge. So when we talk about why this is important, I think there are two very important things. One is that there is a lot to learn from influencers. There is a lot they can do to spread financial awareness, to spread good things about how people should look at money. But at the same time, there is a need to be a little bit more skeptical and circumspect about how we believe something, and how much trust probably we should have in a somebody who is telling us things, and we have to do our own homework, we have to do our own research, and that's something which is very, very important. So with this background, let's start with the uh, topic. I'll first move to what we see as our role in the organization. And like as I said, like this is something which was being said by Siddharth as well, that I look at capital market policy at CFA Institute India in the Mumbai office. And I have more than 2 decades of experience in capital markets. And that is something which has allowed me and given me an opportunity to look at many of these issues very, very closely. I have probably seen the evolution of Indian markets since 2004, 2005, and that allowed me to understand some of these difficulties which probably not just retail investors but even institutional investors might have when a country is evolving and a market is evolving. And at CFA Institute, what we look at these issues, they are important for uh, stakeholders. And as all of us know, CFS Institute and CFS societies in different countries, including CFS Society Sri Lanka, they are not-for-profit entities, and they look at issues which are relevant for capital markets in a non-partisan way. They are an independent voice. They look at issues the way they should be looked at, and they allow the stakeholders to express themselves and to form an informed opinion, and not even, I would say, consensus, but even at the cost of not having a right conclusion, is a major disservice which anybody who is partisan and who is a spokesperson for a particular class or particular industry can do. So we take it like we take immense pride in the fact that the societies across the countries and CFA Institute as an organization are not for profit. And that's why we can say what we want to say. And that is something which is very, very important for us. When we look at some of the things which are relevant in this context and why CFA Institute decided to look at this issue, uh, i- especially this is something which Siddharth also highlighted, that post COVID, what we have seen is that there is a huge explosion of how social media content is influencing people, and not just financial advice. It's in everything. Like, look at even the mainstream fashion, look at the travel, look at cooking, look at any space, any sphere. You will find that in last 5 years, especially since COVID, the explosion of social media content has made a big difference in terms of how we look at information. Even the consumption of news, even at consumption of current events, everything has been influenced so deeply and so immensely by social media content in the last 5 years, that we thought that this is something which is an important topic. So what happened that in January 2024, CFA Institute globally, they worked on a report which focused on how the Finfluencer appeal is influencing decision making regarding investments in the age of social media. And this report is about 1.5 years old, but I would encourage everyone, they can go to the RPC website at CFA Institute Research and Policy Center and can look at it. I think it's a phenomenal piece with a lot of nuanced understanding in terms of how this phenomenon arrived and evolved and taking shape, and how does it influence all of us in terms of how we think about financial advice and investments in general. And as a follow-up, what CFA Institute India did, that we looked at the current landscape of influencers in India and did another research in terms of how the investment decision making is happening. And this was the perhaps most comprehensive and first of its kind study, where we looked at 51 influencers across the board, including mega influencers. For example, mega influencer is someone who has more than 1 million followers, and including 1600 plus primary respondents. And the survey was focused on the investment habits and decision makings of the people. And this was a very comprehensive and detailed study. It was titled Clicks and Credibility, and how the influencer's role in investment decisions is playing out. This report is also available on the CFA Institute website. It released in March 2025. And like, this is something which has grabbed a lot of media attention. There is a lot of interest in this, and the background of this webinar is also related to that. Like, when this report came out, and we were discussing this with the CFA Society Sri Lanka, there was definitely a feeling and a sentiment that this learning and this takeaway is important across markets, and that's why this whole thing evolved. We have also looked at some of the, like, while we cover the content which we have in these reports, but we have very importantly also looked at some of the important suggestions and recommendation in terms of what we can do as different stakeholders. Even as a retail investor, as I said, like, if we look at, there are responsibilities and there is something which we can do to help make better decisions. And there are regulators, there are platforms, and there are so many other people as stakeholders who can help in this cause. Then, of course, Siddharth will have question and answers in terms of whatever you want to ask, and if there are anything in related to the content which we have. So let's move on. What we have is that some of this is actually being covered in very detail by Siddharth as well, that there are deceptive tactics. Like, some people might say that your investment is going to get doubled in 15 days. You invest in a particular instrument. And there is one very interesting thing that was happening in India, that there are a lot of large CIOs and firms which are huge AMCs, asset management companies. There are private equity giants which operate. And in the senior management's name, so let's say there's somebody who is a CEO of KKR in India, or there's somebody who is a chief investment officer of a very large mutual fund, one of the most reputed. In their names, people were running WhatsApp groups, and they were like, there will be a photo of that person, the name will be similar and even same, and everybody would think that this person, who is otherwise well known and very reputed and very credible, he or she is running that WhatsApp group. uh, I would say not just 99%, but 100% of such cases were misrepresentation and fraud. The idea was to push investment advice related to pump and dump schemes. Like you push up a like a small market cap stock price so much, and then dump the entire holding in one go, and the innocent investors get hurt. They make losses. But it was a purely deceptive tactics in terms of the fraud and in terms of how people should be told about the investment advice. Then there are incomplete and wrong information. So, for example, when you talk about what is my motivation to push a particular product, and I do not disclose what I am getting out of it. And that's something which is related to disclosure as well, but it's also related to incomplete and wrong information. So, for example, on one side, I'm talking about that this is the good thing about an investment, but we are not talking about the other part. So, like, for example, when you look at risk and returns, they are related. If you are investing in something which is a high risk product, there has to be more risk that will come in, and high returns and high risk as compared to low return and low risk need to be explained to people. You cannot say that you will make a better return, a higher return, without even explaining that what are the risk associated. Then there are like suitability analysis, which we talked about. And This clearly means that you are not really applying your mind in terms of what particular investment option and opportunity could be useful for a particular investor. There are different circumstances, there are different profiles, there are different demographics, and simply speaking, uh, of course, you have on one side the commodity market, and then the mass consumption of financial products. But on the other side, every investor will have a very different profile, and that is something which an investment advisor or influencer needs to understand. But it's a painstaking task. It's something which take a lot of effort, and that is where the interest is very low. To advise somebody on the basis of the circumstances they are in is going to be a very useful exercise, but it requires effort, and that doesn't happen. Then there are talks and claims about misleading and exaggerated benefits. And that is something which is very common. As I said, like there are times when you wonder how the investors are even believing that this could be true. And too good to be true kind of schemes, as I said, in some way, they are a problem for investors also, because when they believe in something which is very difficult to believe and very difficult to find credible, that's something which requires a lot more research and a lot more homework for that. And then we move on. Like there are examples like this which I have put here. There are a lot of people who advertise their content with no correlation of what the content actually delivers. There will be an image of as like something which Siddharth also talked about, very flashy lifestyle. There will be video which was shot at a foreign location. There will be a background which is very luxurious. But then the content will say that, okay, we will deliver 500% return or 300% return in 1 month. And the actual delivery will not be close. So, for example, somebody is selling their financial market code, somebody is selling their option strategy, somebody is telling about their portfolio performance. There are cases where the misrepresentation is so widespread that SEBI stepped in. The regulator imposed heavy penalties in many cases. They restrained a lot of these influencers from uh, talking about things which are untrue, and they are even imposing fines of people which could be seen as unlawful gains. So let's say if somebody has made money out of innocent investors, they have been imposed with heavy penalties. So there have been a lot of strict action which SEBI has taken in many cases, and that's something which is a good thing, because ultimately, when you see that there is a reward for good behavior and there's a penalty for bad behavior, at least on the fence sitters, that makes an impact that let's behave properly. Then there are also cases where people have like you can see on this slide that Asmita Patel, there's one influencer. she was called she-wolf of the stock market, and options queen. And she had accumulated and collected more than 53 crores uh, by uh, just doing things which were not proper, and without any disclosure, without having any proper strategy to uh, how to make money, and how influencers or telling investors to invest. And SEBI banned six entities, which included uh, Asmita Patel, and they also imposed not just they not just asked them to return the fee which they had collected, but they also asked them to return the money which was made in the process, and some additional penalties as well. And this was a big step because she was very popular and a lot of people were following her without even realizing that the portfolio returns which are being shown, the portfolio performance which is being shown, is completely untrue, is completely false. So that's something which, as I said, like the regulator has tried to address a problem. Again, it's a big problem, it's a large issue, but to the credit of the local regulator SEBI, they have tried their best to address the problems which are in the system and which influencers are responsible for. Again, as I said, like not just between Sri Lanka and India, but a lot of these markets which are global, this problem is not limited to one country or one market. And there is a huge focus on policy frameworks related to influencer activities, what is allowed, what is not allowed, what should be the characteristic of influencer content, what they should disclose, what they should not disclose, how platforms should behave. There is a lot of debate and a lot of active work which is happening. And ultimately, the responsibility between what is the engagement between a influencers and an investor or somebody who is consuming that content, that's where the regulator steps in. Because the way the content is being promoted, the way the content is being designed, probably influences the decision making, and that's where the regulator is looking at even the nuances. And that's something which is a global phenomenon. A lot of these places where you have this problem where influencers are leasing investors, and innocent investors are losing money, uh, the regulator is heavily focused on ensuring that some of these issues are taken care of. Uh, Again, as I said, like there are a few things which about why we think that CFA Institute is able to look at these issues, because this market, like India, is now the number one level one contributor globally. We have 4,000 plus charter holder today, and we organize more than 100 events every year. And India office is also a source of global talent for the organization. A lot of these departments which you see that, for example, research and advocacy, which I work for, and capital market policy, the function, is a global department. And India is such an important market that the CFA Institute as an organization is focusing a lot on the developments and influencer. As I said, like this is a phenomenon, this is a problem which is there across different markets. Uh, I believe that at times there is uh, a strong need for advocacy, including topics like these, because stakeholders' concerns are common. For example, when we because we talk to different entities. For example, regulators, as I said, the conversation which I was talking about, in some way they think that even the investors share the blame. They have to share the blame because they are investing in schemes and instruments which are not right for them, and they are believing the information which is on face of it not credible. Similarly, the influencers will talk about that our objective is to spread financial awareness, to talk about issues which are important for common people and common investors, and in some ways that's not a invalid point. Similarly, there could be platforms which would say that it's very difficult for us to monitor all the content which we have, and in a way that's something which is also a good point. So I would say that The ability to work with different stakeholders and look at the concerns they have and then arrive at policy positions on these matters is very, very important. And why I'm talking about this issue is because Finfluencers is one such issue, because there are so many stakeholders involved. Like for example, if you compare it with the protection of retail investors, protection of retail investors is linked to this. When you look at how the asset management companies will tie up with influencers to sell their products, this issue is linked. If you look at how the regulator will design the policies so that more people look at opportunities available in investment, this issue is linked. So I would say there are a lot of stakeholders which are important for this discussion, and that's why it's an issue which requires a different and a very balanced kind of thinking and balancing all the approaches which we have. Then this is the report which I talked about and touched upon. I'll talk about some of the things which are being covered here. But the key message, as I was saying, is that social media has completely transformed the way information is shared. And the ability to uh, uh, influencers, uh, the, the the user base they have, the follower base they have, and the message can amplify, and that gives them a lot of power. And this this gives a lot of opportunity for brands and firms to hire them to talk about the products, even in unrelated areas. So, like it's a very similar thing to a brand ambassador. The communication is very, very similar in that sense. So, like you are hiring a influencer or someone who you think has a relevant following, and then you push your product, and then you talk about their product. That's something which is leading to a lot of interest in this issue, and that's why this report was created. And I think there were one or two very important takeaways from this. Is that when we look at the Gen Z investors, the younger investors, their digital awareness is on the higher side, and that's a good thing and that's a bad thing, because what happens that whenever you have easy content available, you can learn a lot, but you are also prone to make mistakes because you don't know the credibility of that content. So Gen Z investors, for them, the top information source is social media, but many of them will not be able to differentiate between what is right, what is wrong, and that probably. I think one very clear incident I remember, which is the case that when you are very young and you get uh, into trouble with your investments, you are probably scared forever. You will never come back to the market, and that's something which is a very scary prospect. The way the financial markets are evolving, uh, a 20 something or a Gen Z investor investing in a bad product and then getting scared for life and not invest again in the market is a very, very bad thing, and a very, very bad outcome. Then we look at some of the policy frameworks and the adequacy. And the markets which were covered in this report were the developed markets: United States, UK, Germany, Netherlands, and the social media channels were the all usual platforms: TikTok, YouTube, and Instagram. They were covered, and the focus was to look at the practical recommendation in terms of what can be done better. As I said, like this was a report which came much earlier in January 2024. And as a follow up, we went a level deeper. We not just looked at the content of these influencers and reviewed it, but we also looked at the issues which we had in terms of the investment decision making evolution and investment decision making life cycle for investors. And this was this was the key message, that the unprecedented availability and access to information has created a massive issue about trust and accountability. And when somebody says something on the web is there forever, and you don't know how many people will get influenced from that, and that puts a lot of responsibility. Again, we come back to the same point which Siddharth was making, that with power you have responsibility and accountability as well. And that means that there has to be some regulation, there has to be some intervention to ensure that the content is not misleading. And when we look at the entire landscape, as I was saying, that the mega influencers, the one who are having 1 million plus followers, we had effectively covered more than tens of millions of followers and users by covering these 51 influencers. So you can imagine, like if you look at the investor base, I'm making some very rough calculations. So if assuming there are 150 to 200 registered investors in India in terms of million, 150 to 200 million, and you have active investors who would be, let's say, half of it. And when you look at these influencers and the coverage they have, you are covering almost 60 to 70% of that population. Again, the as I said, like the numbers are very ballpark and this a very back of the envelope kind of calculation. But the report and how relevant it is, I'm just trying to tell you a little bit about that. The idea was to look at the content and review it for these influencers. And these influencers, like just to reiterate this point, there was in no way we were trying to promote them. They don't even know that we have beforehand. Of course, afterwards, if they have looked at the report, they would know that there is a review which we have done, but there is no mention of any names here, in the sense that that information is confidential, that we have looked at these influencers and looked at their content, but in no way our output and our recommendations are influenced by what they do and how they behave. And that makes us like more independent and more credible and more impartial in terms of what we are saying. Then we talk about some of the key messages here. I think you should pay careful attention to this chart. That if you look at this ring, which is on the left hand side, you will see that 63% of influencers, they are not giving any disclosures, and that's a very very bad outcome. So like imagine almost two-thirds of influencers, they are not really disclosing the sponsorships they have, the affiliations they have. And I would say that if somebody is not disclosing the business model they have, that's a red flag. Because at times it happens that you don't know what they are saying and why they are saying. So if I know that, let's say, if somebody comes to me and there is a very famous quote of like it is attributed to different people, including Warren Buffett, but the quote is that don't ask an insurance advisor if you need insurance, and the another version is that don't ask a barber if you need a haircut. And that's something which is very important. If I don't know about the affiliation and sponsorship influencer has, then I am not really in a position to decide whether the advice is credible. And 63% of influencers are not really offering any disclosures, which is a huge number. Then we look at some of the other things. Let's say, for example, it is a very high number, 80% plus, or 82% to be more precise, people, they followed influencers' advice. And interestingly, almost 72% of them are also saying that they benefited. But when you flip this question and when you ask the other side, uh, you look at the chart which you have, the bar chart on the right at the top, 14% of the people in 40 plus age group, they got duped. They got advice which was fraudulent, which led to losses, and this number is just 8% for overall. So imagine people who are on in the higher age bracket, people who are comparatively less aware digitally, their risk component is much higher. So imagine somebody, and this is a very scary proposition. Just let's say step back and think about this, what the implications are. Imagine somebody who is at the age of 60 and who is just retired, and they are investing on the basis of influencer advice. And if they lose their investment, if they lose their money, the impact on them is far higher. And the risk being higher for them is, as I said, a very scary proposition. And that's something we should be mindful of. Uh, Again, as we know that the time spent on social media is huge. So like there are people, majority of them, like the bar chart on the left hand side, 36% of the people are spending almost 3 to 4 hours every day on social media. And again, it's a huge number. Like imagine like 16 to 18 hours of regular time which we have when we are awake, and 36% of the people investing almost 20% of that time on social media. It means that the influence uh, in a conscious way or subconscious way is definitely happening. And as I said, like not just about financial advice, but even otherwise, like you look at health advice, you look at other issues as well. The social media is playing a very important role, and that makes us like more circumspect and I would say worried and cautious about how this investment advice game is being played. Uh, then we have like a little bit on the mainstream investing. Like you have about 3.5 million social media influencers in India, which is a huge number. But I would say that many of them, at least 95% plus of them, would not be very relevant because they do not have that kind of following. But the maximum damage that can come only from the top 1%, and we have to be more focused and more careful about that. Then we have, uh, I think the one important thing here is that a lot of these people, their educational qualification will not be known, their work experience will not be known, but they would claim and they will be self-styled experts, and their information and content uh, is sometimes and in some cases informative, is useful, but there is also another category where the content is downright false and even fraudulent. So, like, it's a funny example, but it has happened that somebody offered an advice on how to get more returns on your fixed deposits or the bank deposits. And what he said and what he offered as an advice was that you divide this into multiple parts. Imagine somebody saying that if you have, let's say, a million rupee, you divide this into 10 parts and deposit in different banks. uh, it doesn't make any difference because the cumulative or interest earned is the same in both cases. It's just like saying that when you have a stock split, you make more money and you are 10x richer. It doesn't work like that because you are now owning, let's say 1 is to 10 stock split has happened. You own just 10% of what you previously owned. The number of shares might be increased from 1 to 10, but doesn't make your holding 10x in that sense. So even imagine that kind of advice is being offered. And I don't know how many people believe that, and there is no research available for that, but it means that there is a clear sense and need for some urgent work in terms of how we look at this situation and how we look at this problem. We have also look at, as I said, like SEBI has been very proactive and very uh, uh, I would say, efficient in terms of taking action regarding this misinformation. They have banned a lot of influencers. They have taken action in terms of imposing penalties and fines. But as I said, like the problem is so big and the situation is so alarming that there is more work that needs to be done, and it involves all of us as stakeholders. And in terms of what we have looked at, the key insights, as I said, like 82% of influencers, uh, the people believe them, and 72% say that they benefited from the advice. It's a huge number. It's a very high number, meaning that the impact is really there. A lot of people who are watching the content are actually believing that advice which is being offered by influencers is something they can act on. uh, Again, there are also challenges where, uh, in terms of the regulation. So I think you should look at the pay attention to what we have in the middle. Only just 2% of influencers are SEBI registered, and yet 33% offer explicit stock recommendations. And I think it's a very important takeaway. Just think a little bit about it. Like we have covered 51 influencers. 2% means just one out of 51 are registered, but one third of them are offering stock recommendations. Would you go to a doctor who may be good or bad? I'm not making a judgment call, but would you go to him or her if he or she does not have a degree in medical or surgery or some higher education in that field? You would not. Similarly, financial advice is a serious business. It's an investment advice is something which can impact livelihood, and this situation is extremely uncomfortable. This is also, as I said, like 63% of people not disclosing sponsorship agreements or affiliation is not a pretty picture, most certainly. Then a little bit on how the investors invest. Naturally, higher returns is something which is a top priority, but there is also a sense that it comes with risk. And there are also, I think, second point which you see is that currently the platforms which are available, there is a there is a good there is a good acceptance for these platforms when there is an ease of operation, like ease of withdrawal, ease of user interface in using it. So a user friendly interface and your ability to access money when you need it and when you want to withdraw, these are the top priorities. And that's something which is a natural thing, but it came with the data as well, that the investors are focused on returns, but they do consider the risk and the past performance as important criteria. Uh, in terms of what we see as the recommendations, I think the most important thing is that investors need to be circumspect. They need to think before they invest. They need to think before they believe any financial advice, any investment advice. And they should not think that the high returns, whether it's equity market or anywhere else, come without any risk. There is a risk element which is always involved in terms of what asset class you are investing in. There is nothing in an asset class which can be completely free. For example, even bank deposits where you earn 7-8% or assured return, there is an element of uncertainty because of inflation. So your net return will not be that much, and it would be dependent on, sometimes it could be even negative if the inflation is higher. And I think last 5 to 6 years, there are several global examples when a lot of countries have faced that difficulty in terms of the returns not matching even the inflation. And that's something which is a problem in many cases. Overall, I think in some cases, the idea to extrapolate the performance which you have had in recent times to extend and believe that this continue to happen in future is also a very dangerous assumption. And that's something which investors should also be mindful of. Then the checklist for them is that, like, you need to look at the regulator registration of influencer. You need to conduct independent research. You have to look at the credibility of that information and assess the risk disclosures. And most importantly, always you have to do your own homework. Nobody will do it for you. You cannot outsource thinking. Thinking and decision making part has to be done independently and has to be done by yourself. And again, be wary of unrealistic claims. That's not going to help anyone. For policymakers, I think registration process has to be simple. There has to be disclosure standards which they need to introduce, and there is a very active need to run more investor awareness campaigns. And there has to be, like, AI has developed a lot. It has in last 24 months. I know it for a fact that the local regulator is using a lot of AI to uh, do fraud detection and reporting, and that's something which can be useful for everybody. And that's something which is a good starting point in terms of how technology can help in addressing some of these issues. Platforms also have a responsibility, like they need to strengthen policies on financial content, and they have to look at how the content is being marketed and promoted, and they have to promote more educational content as well. It might not be similar in terms of its outreach and in terms of its popularity, but regulator and the influencer governing bodies and the authorities can work with regulators and platforms to ensure that there is enough promotional educational content available. I stop here. Thank you. And once again, I appreciate the opportunity to present my research and thoughts I had on this topic. As I said, like it's a very important topic, and where all of us and can play an important role in helping the situation and in addressing some of the concerns we have. I'll stop sharing my screen and over to Siddharth for further comments.
Thank you, Pankaj. Thanks very much for that very informative presentation. I think there were a lot of takeaways. So would like to invite the audience to basically come forward. If they have any questions, you can please share those questions on the chat box. And we can ask whatever clarifications that you have from Pankaj. Until probably the questions start coming through, Pankaj, I thought I'll ask a couple of questions that I had. If I may couple a few of them to what you mentioned earlier, you spoke of few points that are sort of related to the regulator response, I thought. One is on the Mukesh Ambani, Ratan Tata deepfake videos that got viral. And also you spoke of the 2% registered advisor base out of the Finfluencers, or rather of the Finfluencers, 2% being registered and 33% still giving stock recommendations or recommendations in general. And also you spoke of the social media being quite attractive in terms of pitching these products and sort of services, recommendations, and being sort of very friendly towards the Gen Z, and even for 40 plus, they come across very attractive and approachable. So the question that I have is, with all these points, how did the regulator of India, SEBI, responded? For example, on the Mukesh and Ratan Tata videos, how did they respond? What was their response level? On the registered advisors, what was the recommendations, response for the recommendations? And also, how are they using the social media to go to the community to not just create awareness, but also to educate?
Right. I think it's a great question, Siddharth. I think uh, these are very important issues, and I think especially to address uh, the deep fake videos, there is a clear sense that the responsibility where these videos are being promoted uh, is on the platforms. And I specifically am not aware that whether SEBI took a direct action, because the videos were of different nature. There was somebody was talking about uh, the Bitcoin, somebody was talking about a particular asset class, and somebody was talking about a particular instrument. So SEBI, if I'm not wrong, was not directly involved in addressing those problems, but there was something that was noticed, and then platforms themselves started to act on it. So whether some of the users actually went to the platforms and highlighted that problem, because if you notice something as a user, your responsibility is also to tell the platform that there's something which is incorrect. And it might be possible that they may act on it and they may not act on it, but you never know. Like if you're not playing the role of a responsible citizen and a responsible stakeholder, then you are also a part of problem. So like either you are a part of problem or you are a part of solution. So in both these cases, somebody noticed that, and people addressed that problem, and it got. And I'm not 100% sure whether it's not there anywhere, but this is something which I have started to notice a lot less now in last 6 months. So whether to answer that question, whether SEBI directly did something about these videos, that's something which I am not sure of. But many senior officials of SEBI, they did talk about in their different interactions with media, in their different addresses at different platforms, that people need to be aware and investors need to to behave responsibly when it comes to their investment. So overall, that is something which is an important point. But my idea is that it's a responsibility not just for the regulators, but all of us, whenever we notice something which is incorrect and which is fraudulent, which is misrepresentation, we need to be at least raising our voice and let the platform know, because a lot of this content is not monitored and regulated. On the second question which you had, I think that the Finfluencers part, especially, I think when you talk about the registration and when you talk about how they need to be regulated, I think there is one very clear uh, guideline which the regulator has, that anybody who is offering an investment advice or any stock recommendation, which is a part of investment advice, they need to have certain qualification and they need to meet certain criteria. So, for example, SEBI has a detailed regulation around investment advisors, and investment advisors are authorized to offer uh, investment recommendation under certain guidelines. So, if you meet those guidelines, if you are an investment advisor, you have registered yourself, you are meeting those qualification criteria, you are free to do that. But the idea was that SEBI was looking at a lot of these influencers, and suo moto they were acting on these situations and ensured that they take action in time, they take a proactive approach and stop the wrongdoings whenever it is needed. So as I said, like there is a huge problem, there is a big issue, but as such, all of us can play a role, and I would say that the regulator in India has done a fantastic job to address that problem.
Um, Again, I think there was one question I think linked to what we just discussed. The importance of creating awareness really is at the heart of this. I think conversation, like you few times highlighted, Pankaj. I think as much as the regulator is responsible, I think the consumer too should be made aware, and they also have a pretty important role to play here.
Sure.
Yeah, but the last point that I was trying to sort of touch base on the use of social media and the technology by the regulator as well as those who are like us, you and I, or the or the CFA society in general, who are trying to create awareness and educate the public, improve the financial literacy in general. Do you think we are using the social media and these platforms enough to sort of send the message across? Or do you think we can do more? Where do you think we stand in that
I
context?
think I think that's again a very good point, Siddhartha, and I do agree. Like I think if you recall, even before I started making my presentation, I said that there are some very good things a lot of influencers do. They make their content so engaging because it's a free market ultimately, and it's my just again, I'm not speaking on the behalf of my organization here, but in a personal capacity, uh, I am amazed at the kind of followers and the following many of these influencers have. It means that they have good content and they have engaging content. And why it is the case that we or either someone who is responsible to ensure investor protection and to ensure that there is no losses for minority investors in cases of either companies or stocks. But I'm saying that as a government regulator, as a central bank, as a financial authorities and the government, Ministry of Finance, everybody, I think it's a responsibility for uh, authorities and the regulators to ensure that they make good content, they upload and spread it on social media so that they can counter this uh, problem or menace which we have today, because ultimately it's a free market, as I said, like influencer attracting thousands of followers and millions of followers. They must have been doing something right to attract that attention, and that's an important point, because when we do something right and make a content which is engaging, we can convey our message more effectively and more efficiently. And it's a responsibility for all the authorities involved. And I think, in a way, it's an opportunity as well, because once you start making good content and good informational video, promotional video, imagine like there was a time when COVID was at its peak. There were very nice videos and content on how to have good and healthy habits related to hygiene and cleanliness, and that's something which played a very important role in many cases. So I'm thinking that the same applies to social media and how it is being used and how it can be used further to ensure that there is more financial awareness, and there is a huge amplification possible. There is a huge like if you could make a good nice video, you don't know how many people will ultimately watch it. It could be thousands, it could be millions, it could be even more. So one good content could lead to good positive impact in terms of user behavior, in terms of the financial acumen and awareness of people. And that's something which I'm completely on the same page with you, that social media can be used much better by a lot of these authorities and regulators, and a lot of them actually do a very good job to do that.
Absolutely. I thought so too. Given the attractiveness of their pitch, I'm sure we can do a lot more engagement with them and sort of make this sort of a sort of combined journey of growth rather than being on two sides, one trying to police them, whereas they are trying to make an impact. I think this should be a sort of a combined journey in my personal opinion. Again, Pankaj, coming back to one of the points before that, again, I would like to invite the audience, ladies and gentlemen. Please do share any questions that you may have. We have roughly about 15 minutes with Pankaj before we let
That
him
we
go.
have,
He has
sorry to
to.
disturb. See that there's a question in the question books. Can you
Okay,
see that?
sorry. Yeah, no, that's from Dylan. I think I answered. We sort of
Okay.
answered that.
Okay.
So what
And
it says is
Shamat
Pankaj.
Vikramarachi has raised his hand, and shall
Okay,
we? Shamat, do you
sure.
have any questions to raise? You just can unmute yourself, or you just can put this into the chat box. You
No,
can continue.
if Shamat wants to ask a question, he can ask. Miller, can he?
Yeah, he can if he want. I just can allow him to talk. You may continue, Siddharth. Let's see.
Okay, sure. So Pankaj, I think offline we spoke of. I think yesterday you mentioned in terms of the maturity of the influencers as a sort of a domain or a platform. What I told was that Sri Lanka is probably at a fairly nascent early stage, and you told that India is probably not. I thought India is fairly developed given the sort of maturity of the market in general, social media maturity, as well as a smartphone penetration. I thought that India is a fairly mature market. You said no, it's sort of at a mixed place. So, given your deep research experience in the region, where do you think developed markets are more mature markets are placed in terms of the influencers, as well as their impact in general on the markets, and how the regulators are responding there at a let's say a very developed market like say US, Europe, something like that.
Again, I think it's a mixed bag, because just I think it happened in late 2024, that in Hong Kong there was a case of a influencers who got embroiled in a huge controversy, and there were allegations regarding unlawful activities and unlawful gains which were made in monetary terms. Similarly, like these issues arise and situations happen across the world, across the market. Only difference probably, as you were discussing, Siddharth, earlier, that there is a difference in terms of the maturity and awareness levels of the end user. So I think in many markets, the user is or the investor is a little more evolved. They are more experienced. They are more financially aware. So for somebody to misrepresent, to tell advice which is wrong, to talk about improper stock recommendations and deceptive messaging, 500% gain in 3 weeks, those kind of messages, probably the user behavior determines that a lot more, because ultimately the human nature, irrespective of the market, is the same. If you have an opportunity, a lot of people would be there who probably would exploit that opportunity in a wrong way. But if the user base and if the response and audience base is such that the wrong advice will not fly, you are a bit more careful, and there is not enough incentive for you to do that kind of a thing. So I would say that it's a mix of both. Sometimes it might happen that there are some markets where this kind of trend is more popular, but also I think it has got to do a little bit about what the end user and the end investor awareness levels are. So I think we have to work on the different directions. It requires, it's not a, I often say that it's not just a law and order problem. It's not a legal problem per se. It's also a social problem. So like when you have a situation where the awareness levels are low, when people are investing out of just hearsay, and they are not doing their own research, and they're not enough homework, I think there is a little bit of problem at a social angle as well. Sometimes you are making investments when you are too greedy, and that's greed and fear. Like often markets expert talk about that, don't invest when you are too greedy and when you are too fearful, and that's something which is a very good advice. But in social circumstances and in case of social media, that's something which is very, very popular at times. So I believe that it's a mix of both. I would not really say that this particular market is bad or that particular market is good. I would say it's a global phenomenon, and all of us, despite being the fact that we might be at a different level of awareness, different level of misrepresentation, but all of us have to do some more work on how to make the situation better and improve it from here.
Thank you, Pankaj. There's another question from Dylan who's asking on the types of platforms, social media platforms used most by influencers. And he's asking whether there is a tilt towards the Instagram or TikTok, or does it happen? Does it also happen on professional platforms like LinkedIn? How have you seen these different platforms sort of performing in terms of influencing role?
Right. I think that's an interesting question, because what we have observed is that of course YouTube, Instagram, they are very popular platforms. LinkedIn is a little less used platform for financial advice in general. But most of the cases you would see that the influencers will be present across platforms. So it's something which is like the content which they produce. They might have started at just one platform, but over the years they have graduated to uh, being present on different platforms, and that's the case more often. Like if somebody is a very strong influencers with huge following, you will find them that they are present across platforms. And I think this is also uh, this is also important in terms of how the content is consumed. For example, like Instagram, you would have small, very interesting tidbits, very short clippings, and very short reels, which will be useful to generate more interest in probably slightly longer content, and a different kind of form, which is, let's say, 5 minutes or 10 minutes. You can't have that situation on Instagram, but like you can attract somebody from Instagram to your YouTube channel, and talk about things which are probably which require a little more time and little more effort and explanation. So as I said, like there are interesting user behavior and even influencer behavior you observe across different platforms. But more often is the case that people are present across different platforms simultaneously, and you will find the same content being presented in a slightly different and repackaged format across different platforms, depending on the basic appeal of that platform. So that's something which is a very, like, is being done very skillfully, I would say. That whichever audience you are targeting, whichever platform you are using, you try to design your content, and you try to package your content in that format, in that way, so that you make the maximum impact and generate the maximum following out of it.
Thanks, Pankaj. One last question that I have, this is more out of curiosity that I'm asking for academic purpose. India is such a large country with significant disparity in terms of wealth as well as knowledge. So in an instance like that, how do you practically sort of as a finfluencer or as a regulator, how do you practically capture what market segments are actually get captured in terms of the knowledge level? You spoke of in your study the age brackets and sort of responses of those who get caught to it or get responses. But in terms of the knowledge level, do you have an understanding as to who gets sort of caught, if I may put it that way, to certain recommendations and and make losses?
I think that's a very good question, and I would say that I would not know all of it, but whatever I know and whatever I have experienced, again, in a mix of personal capacity and what I've observed, uh, I would make a few points. One is that, uh, as I said, like there is a very strong uh, and it's continuously evolving mechanism authorities have developed. So, for example, like uh, if you call someone today using a India mobile network, whether it is Airtel, Vodafone, or anything else, there will be a audio clipping you get to hear that there is like it's in different languages, but the message is simple that there is a lot of financial fraud which is happening. There are people who are trying to scare you by doing things which are not correct and which are like done with the sole purpose of running away with your money. And that message is very, very simple. It's just like a few seconds, but there is a mechanism which is ensuring that you report if something like this happens. And the typical problems, like for example, it says that people want to double their money very quickly, and that's something which is a very simple message. Like you are trying to make people aware that if something like this you come across and you get to hear, uh, be a little more circumspect, like we be a little more ask more questions what's going on here. And that's something which is useful. And as I said, like and you rightly point out, it's a diverse country, huge differences in terms of one region to another, in terms of different socioeconomic profile and everything. So the authorities are trying to address the problem in a way which gives them the maximum uh, reach and maximum impact. So targeting somebody who has a larger following and who is doing bad thing is the first priority. The second priority will be people who would be, I'm just, it's not an official line, but what I'm saying is that practically you observe that, like the numbers were huge, like the she-wolf of Wall Street, or the markets, or like option queen and all those people, like the numbers are running into crores. And these are the first people who were targeted. And the the reason they were targeted is because the impact was massive. So let's say if you have an amount which is 100 crores, which means like it says a billion rupees. And imagine everybody has lost 10,000 rupees in that crowd. That number itself is huge, because what you mean here that 1 billion rupees is the total loss and 10,000 is the average loss per person. There are almost almost 100,000 people who have lost that kind of money. It means it's a huge number. So I'm saying that the first target is at the people who are making more damage because they have more followers and they have done more blatant things and more wrongful things. And that's something which is the first priority. Then you have people who are doing bad things and who are doing outright fraud, and but their reach might be limited. So second priority will be those people. So I think of course there is no right answer and there is no well defined mechanism here, but I think as I said, like technology is doing a very important job here. And not just in case of influencer, there are other examples as well. Even in the cases of like this is what SEBI has done. In case of a lot of smaller companies, there is a platform which both NSE and BSE has for smaller IPOs. The smaller companies which require less due diligence, less scrutiny. But some of these companies were not great because they had problems in terms of financial statements. fraud and all those allegations. The promoters are not good. So SEBI has activated their own technology, AI. They're using a lot of things which the senior official continues to talk about, and that's something which is being done to ensure that there is fair play and there is no bad thing happening. But again, it's a long way, and ultimately everybody has to work together to ensure that we are in the good place.
Thanks. Thank you so much, Pankaj. As we've come to the end of our sort of allocated time, since we don't have any more questions, Pankaj, let's um, conclude our session. I would like to thank you on behalf of the CFA Society Sri Lanka, as well as the audience, and in general on behalf of all Sri Lankans who use social media, as well as financial influencers as well, to get information, because it's such a democratic form that there are lots of good things, like you did mention quite a number of times, for us to take home. It's a matter of working together to empower and sort of create a platform that's fair, accessible, transparent, so that we can all benefit. And on behalf of all of them, I must thank you, Pankaj, for helping us out again, as you always do, with your knowledge,
My pleasure.
time.
My pleasure.
We really appreciate that. Your invaluable feedback has been a big help for the CFA Society, Sri Lanka in general, for our advocacy efforts as well.
My pleasure, and thank you so
So
much for the opportunity. I always enjoy the conversations and the opportunity to share whatever work we are doing. And as I said, like, a lot of similarities between Sri Lanka and India in terms of the issues we have, even otherwise, not just influencers, but the demographics, the economy, and some of these things are so common that there is a lot of shared knowledge and a lot of learnings which we can share with each other. So once again, thank you so much for the opportunity, to Siddharth, you, CFA Society Sri Lanka, and everybody, Aruna, Minura, everybody involved who have made so much of effort to ensure that this goes smoothly and without any glitches. Thank you so much, Siddharth. Thank you so much.
thanks, Pankaj. And also, I would like to thank Minura, as well as Aruna, and also Rashmi, uh, also who's the president of CFA Society Sri Lanka, for helping us to facilitate this session. So I would like to say goodbye with the hope of meeting again with a similar session.
Thank you.
And
Thank you.
have a pleasant evening, everyone. Thank you.
Thank you, Siddha. Thank you, Pankaj.
Thank you very much.
Thank you. Thank you, everyone. Thank you. Good day. Bye.
So much.